Hey, good morning, everybody. I'm starting a few minutes early on the YouTube side so that I can, uh, do a little shameless plug for the Bullish Bears. We've spent a lot of time and effort last year really redesigning the website and working on new content for the next level library. And the new content going to be coming out soon, pretty special. Um, so we were doing a lot of work last year, and the next level library completely redesigned. The material in here is based on advanced features and tactics in the next level library. Because when I was working on learning options, I really found that there was a lack of material out there, other than the same old generic junk, like going way out of the money with the 10 delta and just that same random junk. So I really wanted strategies and concepts like mechanical trade systems. I was running a lot of those in 2020. That kind of takes a lot of the technical analysis pressure off of newer traders, right? When you can mechanically activate a trade system that has a consistent win rate with a profit factor behind it that can cover the losses when there are losses, right? Because there's always losses. That's what I never did like about those far out of the money credit spread kind of trades. They have a high win rate, but the loss side is just so drastic and extreme that it makes them pretty much a hamster sitting on a wheel. You could run all year doing all that trading, and if you're lucky, maybe you break even. So those kind of systems really just didn't work for me. These videos and this next level content, really helps the trader understand why the particular DTE is used, what strikes are the optimal ones for decay, which out of the money debits are effective, especially when we want to roll them and then lock in a trade that can't lose. More than once in the last 9 months, I've been carrying trades that were started as a debit and then ended as a no lose credit, rolling something that was far out of the money in closer in time, locking in a profit, and then still being able to hang on to it because there's no risk left in it, pulling all of that money across. So I wanted to start the stream a few minutes early, kind of talk about the changes in the website. We worked a lot on the Discord last year, really been building out the community. You can find the Discord by coming over and signing up to the Bullish Bears. And when you try to go to the trade rooms, it will recommend the Discord right there. So you'll be able to just come over to the website, get signed up, hit the button after you try to go to the trade rooms, and come over to the Discord. When you guys come over to the Discord, give me a shout out. My name is Signet, been with the Bullish Bears for a couple of years now and have developed most of the content in the next level library. I didn't make all of this, it takes a team. Plus, you wouldn't want all of it made by one person, right? Diversity in trading styles is how we adapt to different market environments. You want to have content from more than one person, and we have a pretty amazing team. We have a dedicated futures trader. That's literally all she does. Uh, we have a longer term swing trader, and then that's all he does, including weekend review of the portfolio that he has, reviewing the trades that were taken and then his discussion going forward of where he's going to be taking trades. I do a little bit of everything. And for an example, yesterday afternoon, I knew I was going to trade, put on some swings. So I fired up the Zoom, went live, and was building out trades, discussing, what strikes I was using, why I was using it. Then we just put some trades on, and of course, everything is on a live account, not paper. Uh, and if the trade needs to be adjusted or managed along the way, well, I'm going to, because I'm not going to take a loss. And of course, I'm going to fire up the Zoom and do that live so that everybody else can adjust and manage their trade as well. So just a nice little shameless plug. I got that out of the way. Let me go ahead and start the Zoom so we can bring in the rest of the people. Um, and we'll go ahead. I will put the reminder out there that I started these morning briefings not as a way to give someone a fish, but to teach you how to fish. So I am more than willing to ask questions after the stream. Come into the Discord, ask me anything you want. And if I need to, I'll fire up another stream and help. But the recordings and the morning briefing were designed to be around 30 minutes. Uh, don't want to go on tangents trying to look at random stock or try to help somebody with a trade that they're stuck in during this 30 minutes. But afterwards, by all means, come in and ask questions. I'll do whatever I can to help you out. So, good morning, everybody. It kind of feels like Wednesday again. I don't seem like we ran in a circle. It's not Wednesday. It is Thursday, January 13th. There is still a lot of pressure on the dollar. I've been using FX Street as a part of the morning briefing more and more. I really seem to like this start to the day. Getting an understanding of what's going on in the dollar or the why behind the move is really important. When we see that dollar moving, it doesn't tell us anything. It's moving. That's all we know. We need to have some backdrop to that. Why is it moving? And FX Street provides that. We're also going to be, looking at the calendar every morning, so it's kind of a nice little twofer. I'm not signed in. I'm not signed up. You don't need to be to get just this little excerpt, a little perspective on what's going on in the dollar and what we have on deck for the day. Now, like I showed yesterday, when it comes to economic events, one place is not necessarily going to have all of those economic events for you. FX Street does a good job with its expectation graph, right? If they expect it to be impactful, it's a darker color. They'll fill it in all the way. It does a good job of that, but there's a lot of things on the economic calendar that might not even be here, right? Uh, so when you're in the Discord, you could use the bot command and call up calendar as well. And that may show you things on the agenda that aren't listed here. Makes sense? There is Bloomberg with 5 things you need to know. It's a free publication. They send it out to you every single day. But if you have an account at Bloomberg like I do, then, just come over and get it. If you don't have an account at Bloomberg, think about getting one. I think my subscription is like $5 a month, right? But you don't need the subscription. You can see, you could just sign up for the newsletter and they would literally send you this in the mail every morning. Uh, it's a good place to start. You're looking at calendar events, trying to figure out what we got on the docket for the day. When you bring up 5 things you need to know, they're going to look around the world and kind of ask, did anything happen in the last 12 hours that you may need to know about that could be impactful for the market? And is there anything going forward in the next 12 hours that you may need to know that could impact the market? Oftentimes, this is the tangent that leads us down a different path than where we thought we were going to go, because they'll point out something that happened in the overnight hours that we deem worth digging deeper into. Not last night, however, it was kind of quiet, not a whole lot going on. And they are mentioning the dollar here again, right? And I've seen multiple articles on TD Ameritrade, Schwab, and here on Bloomberg this morning, all talking about the sell-off in the dollar. It's worth taking a little bit of time to read that up. Markets are quiet. We're all sitting around waiting for the econ to come out, including the jobless claims. And then we have Bernard Brainard's going to be at her nomination hearings today at 10 o'clock. And then we've got a couple of other Fed members talking later in the day. So just a nice little perspective of what's going on, and it's free. It doesn't cost you anything to sign up for 5 things you need to know, right? So once we get that out of the way, I use Thinkorswim not necessarily to trade, but most definitely to do my analysis. Go to Market Watch. It's kind of my stopping spot first thing in the morning. Bring up the economic calendar. If your calendar looks really full like this, you're going to find it hard to see the economic things that we need to see. The fastest way to just clean all that junk up is to turn everything off and just turn on the Econo Day event. I like to take the description and drag it across, bring it over onto this side. That way it's right next to the time. 8:30, 10:30, 11, 11:30, and 1. Notice the additional auctions today at 11, 11:30, and 1. Those additional auctions are game changers. They can reshape the day. So be on the lookout for that. I really don't expect too much out of that report at 10:30, the natural gas report. But on the other hand, the way the market responded yesterday when we got our petroleum status report really tells me that you may want to just lighten up your contract sizes around 10:30, or if you're thinking about getting into a trade, wait for that 10:30 report and see if there's any reaction. It's very likely that there's not going to be one, but you never know, right? And what we do know is at 10:30 they're going to come out with a gas report that could cause some volatility. Plus, Brainard's going to be talking during that time, and it's very likely that the market's not going to do very much, that it's going to be muted with a lack of volume while she's in there talking. She's not giving anything out on policy. She doesn't make policy. She's not going to be suggesting any new kind of policy, hopefully. And a lot of what she is doing is just formality and trick and pony show, right? This is all just an act and a show for us. It's almost it's almost like going, to New York and watching the plays. And their goal is to not rock the boat. They want her to answer questions and talk without actually saying anything meaningful or impactful, and they don't want to move the market. So we'll see if they accomplish Operation Don't Rock the Boat. As we usually do, after looking at the econ events for the day, want to come out to the daily chart and just take a look around. I've had a lot of day traders who tell me, well, I'm a day trader. I don't need that daily chart. Why would you just blindly choose to ignore data that could be insightful or impactful? All right. Go out to the daily chart, take a look around. Hey, maybe you're going to get out there and there's nothing to see. It happens all the time, right? Come out here and look around like, I didn't see anything worth looking at. Fine. But if you don't look, you wouldn't know, right? So just come out, take a look around. You don't always have to have an agenda when you come out here. You're just looking around, right? You could ask some basic questions. Are we above the 50, the 20, the 10? Are the 10 and the 20 stacked on top of each other, right? Are we looking at a market in momentum, trend? Does it have health? These very simple logic concepts at a glance can give us an idea of where the market is at. Are we near the high of a range? Are we near the low of a range? Are we still inside day, inside week? So it's just a very short, quick perspective. Doesn't take a lot of time. Come out, take a peek, move on. All right. So you can see that we are inside week. We talked about this on Monday when we had actually started to fade down outside of the previous week. We had talked about that 20 period moving average and how we were looking for a bounce and then a move back up. That's exactly what we've seen through the week. Hopefully, you caught the trade that we took in the Nasdaq from 15.2 to 16. What was the 16? 15.8. Still, it was a nice run, right? 15.2, 15.8, right? That's the play. And we got another one coming up. We're going to be taking another swing trade. I think we're going to be basing this one on the ES, though, not on the Nasdaq. We'll see. So come out to the daily, take a look around, and then start bringing it into the intraday. As you can see, we are tangled up between the blue and the green. If you're new to my streams, you don't know my color schedule. 10 is blue, 20 is green. They're always that color, no matter what platform or charting system I'm using. I keep my colors the same way every single time so that I know at a glance when I see a particular color, I know what moving average that is. It sounds very simple. I can tell you it is a game changer. You teach your mind to recognize those particular colors. You can teach a 2-year-old what red and green and go and stop means, right? And it just becomes a part of their logic. Well, do the same for moving averages. For today, we do have the start of a little bitty head and shoulders. The nice thing about Thinkorswim's new quadrant tool is that we can measure that head and shoulders and plot our target. So we're looking at around 46.84, 46.85. That would put us right around the top of this price shelf, that Globex pivot point from back there. It's unlikely that we're going to see a move like that without some sort of news, but we do have news on deck, so it could come right in, right? We No amount of technical and analysis in the world is going to tell us what will happen when that report comes out, the job numbers in a little bit. But a downside break, matching the pattern for the head and shoulders on this 15-minute would put us right around this blue box down there. To get there, we would have to break through the bottom of the Globex low and yesterday's low. Those will be first touch pivot points. Simple enough to just mark them out and have the expectation that when price gets to that line, there's very likely going to be a reaction. Price is very likely going to jerk back or jerk away from it, very similar to touching, a very hot skillet sitting on the stove. That jerk back reaction can be a first touch play. You can get an entire day done right there. Should we break that low, we are going to complete the head and shoulders pattern. And if worst comes to worst, we'll test this orange line. Orange on my charts is the 50 period. Since it's a straight orange line across like that, it tells us it's the daily chart moving average. Just like this green line straight across, that's the daily moving average. And this 10, the blue one, straight line across, that's the daily moving average. If the news is positive rather than negative, we're going to look to break this head and shoulders pattern, not see the follow through that it is printing. We'll focus on taking a new Globex high and then dealing with yesterday's high. I would go ahead and take that pivot mark right there at the 47.30 as well. If we push through it without any interference, I would be really surprised. Probably not as impactful in a first touch capacity as what we were discussing down here, but it would definitely be worth the marking and keeping your eye on for an opportunity. So that deals with the ES. By the way, when the ES, we're already here, we may as well take a look at it. Your ADR for the day is 1.28%. ADR, average daily range. This is a 20-day average, which is a one market month. In the last month, the ES has moved consistently around 1.2% per day. Obviously, there's been days where we've gone way beyond that and days where we didn't come close to hitting that. And that's why this is an average of the last 20 days. So that's your ADR. For the Nasdaq, simple thing, just come out to the daily and take a look around. You can see the same concept that we were talking about earlier in the week. Price aggregates, it expands like that. The megaphone is a phenomenal pattern to learn just from that logic alone. And it makes sense when you think about where the liquidity is at and how a seller on that dome is going to have to reach a little bit lower to find a buyer because the buyer is going to look at a pivot point and say, well, I'm not going to put my buy order there. I'm going to put my buy order a little lower down. And that seller is going to have to reach a little bit lower to get that buy order. Right? Flip the same logic over for the top side. So price aggregates. We can see that in the Nasdaq. Nice recovery yesterday. If we were to turn on something like the 100 period, we could see that there was some interaction there. I'm not really interested in doing it, but maybe you would want to and take a look at the interaction between price and the 100 period yesterday. I do believe we're back inside the box being the weekly expected move. We reached outside of the weekly expected move on Monday for a lot of products, right? Not just the Nasdaq. So you can see that tag on Monday that I was talking about. We're inside day right now, just sitting inside yesterday's price action. This is very similar to the bear pennant pattern that we play, the bear pennant failure pattern. This hasn't failed yet, but very, very likely to. So now this is our backdrop. We're looking for the Nasdaq to make its way through these levels to the upside. Wow, thinkorswim. Should the news be positive to the Nasdaq, will look to breach back through the Globex high and challenge this 10 period moving average, which also coincides with this pivot point back here. So it's kind of a twofer on that. Then yesterday's high. If the market does not like the news, we're going to challenge the Globex low, which is relatively close to yesterday's low. It's worth marking yesterday's low, but I would definitely mark yesterday's Globex. All right, that's going to be the one with a lot of impact. First touch play, at least. We also do have that little micro head and shoulders here, just like we did on the ES, which means we can use that quadrant line tool and kind of plot what a head and shoulders would give us. Puts us right around that Globex, just confirming the same pivot would be in play. So it's all on the econ at the moment, right? No amount of technicals are really going to give us the defining characteristic of which way are we going to go. We got to wait for the news to come out and then ride what we get. Speaking of the news, since everything has been directly connected to the dollar and the bonds in these last few days, when we're looking at the market and we're saying, what moved the market? What was that? Very likely it was the dollar or the bonds. With the dollar falling off the way that it has been, keep your eye on it. It is definitely worth keeping your eye on, right? We don't always know what the move is going to be when we see the bonds, just really start waking up and making a run or starting to fade off. We don't always know what its impact is going to be, but at the very least, you'll see that it's beginning to unwind. It's beginning to happen, right? So if you're sitting at the top of the range looking for a breakout and you suddenly see the bonds start to rip, you may choose to wait for that breakout to actually happen before taking the trade, right? It can just offer you that one more moment of hesitation while you wait to see what plays out. When you're watching the dollar, keep your eye on it to make sure that it does not begin to resemble the VIX. When the dollar and the VIX begin to resemble each other, then it is very tightly correlated as a global risk asset at that point. A couple of names on the list. Gapped up with inside day breakout possibilities. Caterpillar, Chevron, P&G, GE. Intel has an R2G forming. Goldman Sachs has a gap up inside day breakout. Modelo's, USB, and XOP. Slingshot plays. AIG, Morgan Stanley, WBA, Kroger, and CVS pharmacies. 20 daily moving average support. DDS, be careful with that one. We're already outside the weekly expected move. We're underneath that 50. Tesla has a bullish signal line cross. So does Garmin. And then we've got a laundry list of names in a new uptrend and a Bollinger Band squeeze. So I'm just going to leave that sitting there for a moment so that you can take a screenshot of it. That way I don't have to try to read all those names. And we'll just look at the things that are moving sector wise. That way, the screen isn't moving. You can get that screenshot. Bitcoin kind of fading off a little bit. We do have that same pennant shape, and it is a gapped up market. A lot of times we see that gap up before it faded back down, and it did hit its head on the 10-period daily moving average. Cloud computing, I was actually looking at this last night for a possibility of a red to green and just for that bear pennant play. It's failing at the moment. It took that rejection on the 10 yesterday, and its options, it didn't look too bad, really. I was looking at the options for, maybe a longer term trade. And yeah, it didn't look too bad at all. I'm already carrying an XLK. I may be adding a cloud name to this. Don't know if we're going to leg into an iron condor or just put on an out of the money debit. But when I make that decision, I'll very likely do it during a live stream in the same channel that we used yesterday. Emerging markets is negative this on this, but it doesn't look negative here. So when we start to bring that in to the intraday, you can see emerging markets is down from where we left off. Now, this is my global risk gauge, right? When global risk is bullish or they just don't see a lot of fear out there, we see the EEM bid up. When global markets are taking a pause or are tiptoeing or proceeding with caution, we see this thing start to run sideways or fade off in the pre-market. So a lot of names on that list to go through. I would highly recommend that you pair it with something, right? Because these are daily indicators, like the Bollinger Band squeeze. That's a daily analysis. Cross above the 20 DMA. DMA is the daily moving average. So that's a 20 moving average cross up and a 20 moving average bounce and a slingshot and a Bollinger Band, all on the daily. It's worth going and taking a look at those for an opportunity. A little bit of due diligence. All right, TD Ameritrade offers all kinds of, and so does every broker. Let me make that clear. You can go to Fidelity, you can go to Schwab, TD, IBKR. They all have something very similar to what we're looking at here. That you can go to news and read news headlines before the bell, including insight on the day. Right? They also have CFRA reports. Those are literally free reports talking about the sectors for the day, uh, things that they're going to be looking for, a recap of yesterday. See the CFRA Sector Watch, that's usually a weekly publication. Every one of your major brokers has something like this because you are the thing that they are focused on, right? They want your business. So they're all in competition to get your attention. They want to provide you all kinds of goodies in the morning. And these Argus reports are a really good way to start your morning too. Just come over there, fire them up, take a look at them. They're free. Just check your date, right? Make sure that it is the newest one because I think it comes in around 7:30 or so. You can see we got January's report for Argus sitting down, or for CFRA down there. And we don't have the new one today for CFRA. I don't think those come in until around 8. This is also a good place to go at the end of the day, right? To get that market review. One thing that used to drive me crazy is I would see moves during the day, and when I would go look for news, I couldn't find anything. So then I didn't know why the moves happened. At the end of the day, it's worth coming in and taking a look around to see if you can find the why for the move. It really helps on a deeper understanding of what's going on in the market, what's moving markets, and then what can we be looking at going forward. And it's free. And you got to love free, right? We got enough freaking expenses as traders. Any good information that we can get for free, we want to take that. The sectors this morning: semiconductors are hot this morning. If you can find any with the inside day, IX10, R2G, trendline breakover, all on the daily, any of those on the daily, that would be more in focus, right? That'd be what the ones you'd want to focus on the most right off the bat. Notice that we have a lot in the green, but not very many are above a 0.5%. That's my own little personal benchmark when I see things that are up in the pre-market. It needs to be up at least a 0.5% to show me that it's serious. Because we could have moved in the overnight hours, right before 7 o'clock last night, and that would still be considered quote after hours. So it would still be up quote in the pre-market. Well, all the momentum that may have moved it last night before 7 could be gone by now, right? So when I'm looking at it in the pre-market, I really want to see that it's up at least a 0.5%. That's a really good question, Autumn. And I recommend coming into the Discord and asking that question because, as I stated when I started these morning briefings don't go on a tangent sideways, answering random questions. It is designed to specifically hit key points, get it done as fast as I can, kill the recording. I'll happily start another recording and try to help you. Just come on into the Discord, ask me questions. I'm there for you. My name is Signet, by the way, so you can catch me in the chat. I'm in any of the chat channels. You can see also tech is up this morning. It kind of fits with the cloud computing. The sectors aren't a lot of help this morning, right? This is the kind of day where I say we're going to have to really lean on our own scanners. The scanners that I like to use focus on weekly options because I'm an options trader more than I am a stock trader. So, from that perspective, the watch list is just designed asking a question that says, do you at least have weekly options? And if the market does not, then it doesn't get this list. It's a long list. There's over 600 names, which is why I have two watch lists here. TrendSpider will only let me make a watch list of like 350 names. So I had to make two, but it's really just one scan, names with weekly options. Since the sectors aren't giving us anything of value, we have to lean on something else. You can see that there are a lot of names this morning and every morning that are up at least a 0.5%, which is my benchmark. So it's on days like this where we have to go in and run our own scanners and really try to pick our own plays because we're not going to be able to lean on the sectors for those opportunities. I can see again that the chip names are hot this morning, right? But that's not the only thing out there worth taking a look at. We can see that pot's doing really good this morning. There's not a sector for pot, right? It's not like one of the S&P 500 top 11 sectors. So you got to either use an ETF like MJ or do what I did and just kind of build out a little bit of a pot list. Then in aggregate, when you're looking at all of those names together, you can kind of get a feel for what's up in the pre-market. I didn't just do that with pot though, right? It's worth doing the same thing with EV names and with crypto names. The names that I got on this list for crypto came from the Smalls Exchange database on their crypto futures product. I know I probably just ran you in a circle there. Can get a little confusing. Ask me about it in the chat later on. But we can see that crypto's looking really good. EV as well, looking good. There are a few names in there for maybe a good downside play, right? XPEV being one of those, maybe Li Auto, catch it on the rebound. And that is a wrap, guys. Be careful, be safe. I will see you all in the live streams.